What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and we're going to be going over the charts as usual. The markets all have topped, in my opinion, as most of you guys know that watch my videos. We're going to go over all the charts. There is a chance of one more pop up, which would be bullish for Bitcoin. We'll take a look at that. Although, I think there's a good possibility we just continue down from this spot. So let's get into the markets. We're going to take a look at the Dow. We're going to take a look at S&P, NASDAQ. I'm going to show you a lot of fib retracements. We'll also take a look at gold and silver. I asked on the last video if anybody wanted me to make the videos shorter, just do Bitcoin and then do traditional markets on a separate platform, but we are on a separate video. Most of you guys wanted it all in one, so we're going to do that. We're also going to take a look at BNB, XRP, Ethereum, and Litecoin at the end. If that all sounds good to you, make sure you smash that thumbs up. Leave your comments down below. Let me know what you think of the video and the format of this one. It's going to be a little bit longer, but there is a lot of information here, and you guys are going to want to stick around for the whole video to get the most out of it. Let's take a look at what's going on, where we're at. So, as you guys know, I'm super bullish or bearish, super bearish on silver, gold, and all markets. When the markets crash, like I do believe is coming, it's not doom and gloom. There could be huge opportunity if I'm right. Remember, none of this is financial advice, but we're going to be going over this, and I'm going to show you what I believe is happening. You're more than welcome to leave your comments below if you disagree or agree. Let me know what you think. But let's take a look at what's going on. So silver, as you guys know, is just in this wedge here. Now in the bullish case, you know, it gets up to the $35 range, somewhere in there. In the bearish case, which I believe is more likely. Remember, guys, I made this chart 2 years ago, right? Maybe 3. It was right around the break of this. So yeah, about 2.5 years ago. I'm looking for this 15.6 to $7 possibly, depending on how bad the markets crash. If you look back at every market crash in history, gold and silver crash with it. Not as hard, but they crash with it. Let's take a look at the fibs here. So if I throw the fibs on, which I already did from the bottom here, or I'm sorry, let me from the top to the bottom, we've retraced not quite to the 786, but we've got rejected pretty hard at the golden pocket zone, right? Right now, we're going up to retest the 0.5 fib again, which is at 23.8. Let's look at gold. So gold, same thing. Everyone's getting super bullish on gold. May get one more little spike up here. As you can see, let's throw the fibs on. So the fib retracement just from this last high to where we're at now, and look at where we're at on the fibs, right? So where we'll probably get rejected if it continues to the upside would be around 1978 to 1987 is where I'd look for a rejection, which is the golden pocket zone. Now we could go up to the 786 at 20,023, get everyone bullish over 2,000 again before coming down. But as you guys know, I have some very low targets for gold. 1550, 1560 range has been my target for about 2 years. Still think that's a very good possibility. This up here looks like a triple top. And if we zoom out to the weekly, let's say, this looks like a completed 5-wave structure, right? We had the wave 1 back here, 2, 3, 4, which didn't come back over one, down below 1, and then 5, right, with a triple top. That's super bearish in my opinion. A lot of people are gonna not believe that because for some reason people always think gold rises when the market crashes, but in reality it crashes with it, just not as hard. NASDAQ. So as we've been looking at NASDAQ, we are in this rising channel. We broke down out of it, came back up in for a little bull trap inside, and now we are back below. And if we zoom in here, you can see where we're at. We got rejected there again. You're going to get some support here around that 14,250 range right in here. Now, this isn't going to happen overnight, guys, but my next target's still around this 12,500 range. If we throw the fibs on this one, we're going to do this on all the charts. So just to show you the importance of Fibonacci, right? So you put your retracement from the swing high to the swing low and look at the 786 getting rejected. So let's look at what this could be. Let's look at put our trend-based fibs on from this high to this low. Bring it up to the high right that we had up here, right? Let me get this out of the way now. And these are your targets right here. A 1-to-1 extension being ABC here, which would be bullish if it came down to this range, 9,600. If that breaks, your 1.272 is 78. If that breaks, you're looking as low as 57. Now, you guys know my bubble pop theory, right? So this just looks like a big bubble pop, just like Bitcoin, just like all the ones I'm going to show you here in a minute. Now, make sure you guys subscribe to the channel if this is interesting to you. If not, then don't. But also, if you want to get this video out to help people, make sure you smash that like button. It helps so much. A lot of people I know forget to do it, so just take a second out now, get her done. All right, looking at the Dow Jones, as you know, I thought we were in a rising wedge here. If we were to get bullish, this would be where I would look for a rejection around the 35.1, 35.2 range, depending on if, when, and where it hit this rising wedge again. But again, let's throw the Fibonacci retracements on here. From the swing high over here, which I believe was the top of the market, to the swing low, we're getting back above the 0.65 golden pocket zone right here, right now. But the 0.786 is at that 35.1. We already went up, got rejected by it here. We stayed above it for a few days, but it did get rejected. Now we can throw the same Fibonacci retracements on there if this was our high, right? From the swing high to the swing low. I'm sorry, this Fibonacci extension, right? So the 1-to-1 would actually be lower than my target here. And this target's just a target of the breakdown from this falling wedge. You take the widest point of the wedge right there where it broke down. Gets you at that 27.7 range. But we also have the 1-to-1 extension at 27.3. And then we have the 1.618 at 22.1. Now if that hits, that would be, this was a wave 1, 2. This would be 3. We would get a rally and then even come down lower, possibly much, much lower. This trend line is, let's see, where it started right here back in 09. Interesting. So anyway, I believe we come back to the median at least down here at some point. Now we can take a look at the same thing here. The S&P, right? Same thing. We had our high over here. Let's take our Fibonacci retracement from the swing high to the swing low. And you can see just above the 0.786. Right now, we're getting back around that golden pocket zone again. Same thing, same market structure, guys. Rising channel. Now let's put the Fibonacci extension on there. Get this out of the way. Put the Fibonacci extension from the swing high to the swing low. Now, everybody thinks it's doom and gloom that I'm saying the markets are going to go much lower, but there is so much opportunity if this happens, guys. So much opportunity. And I don't think the markets are going to shoot back up to new all-time highs anytime soon. But if you catch near the bottom, you can ride that for decades, depending on how old you are. If you're younger, in your 20s, 30s, you could ride it out for a long time and just pay yourself out of the profits, right? While at the same time, people that were buying up here, if this does happen, they are not going to be seeing even break even for quite some time, in my opinion. Now, I put this information out there to try to help people, not to make people sad, and people get so mad when they hear something they don't like. So that's why you see all the negative comments, negative things. We seen that back when I warned everybody above 60,000 to get out of Bitcoin. It was going much lower, right? When everyone said 20,000 was going to hold, broke right through it. I think the same thing will happen with Bitcoin again, and we'll take a look at that here in a few. But as you guys can see, so here's our targets from the Fibonacci extension. The golden pocket would be right there around 37.75, and then we have the 1-in-1 extension, 32.91, and then we have the 1.272 at 29.23, and then of course we have same long-term trend line, the median line right here, right? Around 2700, somewhere in there, and then we have the 1.618. Remember, if we hit these 1.618s, we'll get a bounce and then more downside. So this whole bear market could happen really, really fast, or it could be drawn out. But the next leg down, I think, is going to be quick regardless, right? So oil, as you guys know, my oil target, we hit our first one at 62.70. I do believe we'll break back out of this rising channel and come back down to the $27 to $35 range. Now, I know with all the stuff going on, people are saying that's a crazy assumption, but guys, I read the charts only. I don't care about the news. Show me the charts, I'll tell you the news. The news is bad, regardless of what others tell you. I don't like to follow the news. It will get you wrecked in markets, right? So, all right, let's take a look at the DXY. I'm bullish on the DXY. No surprise. I've been bullish on the DXY for a very long time. Looking at this falling wedge right here in the solid white lines, you put the breakout point right here. That measured move is about 115. We also have much, much higher targets, but let's stick with the, more near term. Now, look at this. These dotted lines right here, we have a falling wedge. If we take that measured move from the widest point of the wedge, right, bring it to where it broke out, that gets us to 109. Now, we had talked about this trend line right here, the 106 being a rejection area. We got a little spike above it, came back down, got rejected. We've retested it again. Now, in the bullish case, like one more leg up, and I don't mean new all-time highs for any markets. I mean one more leg up before the actual push down. The bullish case would be if we put the fibs on here, right? From the last swing high to the swing low on the DXY, and then to this swing high, the 1-to-1 extension, which would be bullish, is the same as the 0.382, right, that we broke through. Come back down if we retest. So in the bullish case, we come back down and retest that 105 range. Once we do that, it is off to the races, if that happens. But the quicker bear case, which again, I'm going to show you that in the Bitcoin too, using the Wyckoff method, so stick around for that. But yeah, if we get above this 106, get support, my next target's around this 109. And so the bonds, the 10-year yields, I've talked about this. Once this trend line breaks, we're going to take a look at some simple measured moves here, right? So once this trend line breaks, you could look at this two ways. You could look at this as a left shoulder, head, right shoulder, and the dotted line being the neckline, right? Let's take a look at that and the measured move for it. So if we'll take this right here as the measured move. You measure from the neckline, right, to the head. You bring that up. If it does break this area, guys, it's probably going to be pretty swift. That would get you about 8.2%, right? Now let's look at this white rising or white broadening wedge. Let's say we take the measured move of the breakout point of that, we bring it up, that gets us around 7. So I'm looking for between 7 and 8.2. Could go much higher if things get a lot worse. Before we go into Bitcoin, if you guys are interested in trading, definitely check out Prime XBT, by far my favorite exchange. They don't trade against you, and you can literally make your own financial freedom. Here's a word from the sponsor. Check them out.
Begin your path to financial freedom. Gain up to a $7,000 bonus on us. Register and use promo code. Deposit and enjoy a 7% bonus. Available now. Link in the description.
All right, like it said, the link is down below in the description. This is Prime XBT. They have also put a crypto's future different section in there, but the global markets, you can trade crypto, forex, gold, silver, oil, S&P, Dow Jones, oil, everything all from this one exchange instead of flip-flopping from exchange to exchange. Definitely check them out. If you haven't already, use my promo code SAVVY50. That'll get you up to a $7,000 bonus. SAVVY25 will get you 25% off of your fees. The link is down below. Check them out, guys. There's also a VPN link down there. If you are doing anything involving money, I mean, even in your daily, day-to-day stuff, use a VPN, guys. I have a link down below for pure VPN. Using my link, you get a huge discount. It's super cheap. I think it's like $2 or $3 a month, something like that. Definitely check them out. All right. So the Amazon compared to Bitcoin.com bubble. There are other bubbles I'm going to go through on this, but just quickly, I'm going to show you bubbles always return to where they began. That washes out all the garbage, right? There's a lot of crappy exchanges, a lot of crappy characters, a lot of crappy coins in crypto that need to get washed out. A lot of vaporware is going to vape out, right? I look for us to come back to where we began. As you guys know, I think it's going to be somewhere between 3,500 and 9,700. I still believe that to be true. I'll let you know if my opinion changes, but it has not changed in over 2 years. Everything's still playing out. Look at this chart, guys. You can see this here was a 100% rally. You can't really tell, but it went from 4 cents all the way back up to 9 cents before it hit its true bottom, right? I think this was our false bottom, and we'll still be coming down to our true bottom. Now let me show you another one. Nintendo, same thing. We had a big false bottom. Now imagine yourself back here, right? When after all this, all the devastation and everybody's scared, but it went so high. It was so hyped. It was so good. So much good news. Then you got this rally. I'm sure everyone was extremely bullish again, just like they probably were on this rally, just like Bitcoin was on this rally, just like people are right now in here in this bear market rally. Let's take a look at Sony. Same thing. Look at all these false bottoms in Sony before it hit its true bottom. But as you can see, they always came back to where they began, right? That's how bubbles work. Washes out all the crap. You get all the hype, all the great news, great things. Everybody is buying. Retail gets sucked in, and then they come out. And you always get these bounces. These guys that are selling wait for these bounces. They want these bounces. They kind of just sit and dormant, letting people hype it up and get back in, just like is happening in Bitcoin. And then boom, right? Same thing here. Just the bubble pop pattern, guys. All right, now we're going to talk about the possible bullish case scenario. We'll get into the smaller time frames too, but the bullish case scenario still is not truly bullish. It's temporarily bullish, right? So these yellow lines here. These are just gaps in the CME, right? So there's one up here at 34,445. We may wick up in the bullish case, get up here, right? And I'll show you this on wick off too, and then continue on down from there. Now let's look at what that would look like. Those that were around back in March of, when was this? Back here, we called the same move on the wick off theory right here, right before we got this big spike. And we called it at 64.5. It went up to 65. Nevertheless, we called that. We are doing possibly the same thing here. If we do, it will look something like this, right? I've drawn it in here. Whoops. Take that off. Just like I did back then. You can go look at my videos from back then. I called it about 2 months before it happened. So if that was to happen, it would look like this. That's the distribution schematic part 1. Now here's a couple more things I wanted to show. So another, oh, dang it. Let me get this back on here. So the market cheat sheet, right? Same thing. You see this huge bounce up here, just like you had in Bitcoin and all other markets are in right now. And then the huge crash, false bottom, and then you come down to the true bottom eventually, which is much lower. But everyone gets super hyped up in these little bump ups, right? Now let's take a look at, this is the wick off schematic that we're looking at right now. Let me show you that. Oh, I don't Yeah, there it is. Right here, right? It seems to be a very good possibility. If it does, I'd be looking for that 33, 34,000 somewhere in there. Get everyone bullish because it'll break this high and then continuation to the downside. Now, that's schematic one. Here's two, which is very possible. I showed you guys these about 3 weeks ago. I actually drew them out about 3 weeks ago. It would have been right around here. So, yeah, September 23rd. So, about a month ago, right? So, this one is schematic 2, where we could end it out just like this, and that spike could have been enough right there to get us here, right? And just another redistribution, just like we had the distribution up at 65K, right? Same thing, guys. So many things are pointing bearish. Let me point you out to another chart. This one here, just a fractal playing out, right? You had the trend line off of these lows, trend line off of these lows, came back up at 48,000. Now, a while back, I was saying 28,000 is the new 48,000. This is why. If you were around right here, everyone was super, 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 super bullish, right? Because it was breaking up and it broke this high, and they started saying higher highs. In all reality, you're making lower lows and lower highs. That's what we're doing here, guys. Um, Same thing. This thing's about to come down. Like I said, you could get one more spike up, fake out everybody, but this thing is coming down hard. Here's a reversal diamond in the monthly, right? This is my monthly chart I've been showing. Here's your high, your lower high, and here's your lower high. Even if we got that 34 to 35 would be a lower high. Lower low, you go after the high, right? Lower, here's your low, lower low, another lower low coming, guys. I really truly believe this. Now look at the reversal diamond here. If we took a measured move of that reversal diamond, let's see what that would give us. So that would be the best case scenario if this breaks down, right? Bring it here. If we break down this month, that would get you down to where everybody thinks around 16.2, which everyone thinks will be a false bottom if we reach there. I mean, a double bottom, which I think we're most likely going to break that, guys. I don't think this thing's doing all this just to make a double bottom up here without returning to where the bubble began. All right, here is another one. This is a bubble pop count, right? It's not an Elliott wave, it's a bubble pop count. You had get 5 waves down. Your fourth wave, just like an Elliott wave, cannot break your wave 1, right? It can't go higher than wave 1, which is this red line here, which is 33,000. You can see this red line also, that is the low before the all-time high, right? And look at how bad we're getting rejected there. Guys, I'm looking for that 35 to 9,700. Here's a daily chart, right? Look at this as remember, we're going to be going over Litecoin, Ethereum, XRP, and Binance, or BNB here in a minute. So stick around, be patient. I'm just showing you all markets are showing bearish, very bearish, bearish charts, guys. All right, so looking at this as the neckline, right? You have your left shoulder, your head, your right shoulder. Your measured move of the breakdown here would be measuring from the head to the neckline, and you bring it down to wherever it breaks on the neckline. But that's going to get you somewhere around 17.8. So expect to bounce in that range if we get down there. I don't think it'll probably come back up and test this next neckline. It may do something more like, if we've topped out here, do something like this, come back down, retest, and continue down, get another bounce, maybe bounce around in here for a while, and then come on crashing down. Either way, everything is, like I said, point bearish. Let's look at the 4 hour, then we'll go into the other coins, right? So you guys know I had this wave 2 down here. We got our crazy wick here. This is what I'm looking for now. I still believe, see, that gets us down to about that 17.3 to 17.8 for wave 3. Let's throw on the fibs here and look at where we got rejected and what this could mean. Also, if we throw this on the daily, let me do that. Oh, this is the daily. Looking at this on the daily, you can tell we had higher highs right here and we had lower highs right here, right? Bearish divergence in the daily. Just wanted to point that out. So let's take a look at just this wave here, right? Let's see. Let me move this out of your way. Let's put your Fibonacci retracement from your swing high right there to your swing low right here. You got rejected. You got a wick almost up to the 0.786, but you got major rejection from this golden pocket area, right? So if we look at that as wave one and wave two, right? We put the Fibonacci retracements on it. That can give us our next levels to watch for. Resistance or support, I'm sorry. So it would look something like this. Your 1-to-1 extension is going to be 23,000, right? Then you have 21.2, which is your 1.272. Then you have your 1.618, which is your wave 3 target, right? Which would be around 18,800. But I think we'll probably get pushed more down into this range here. And then you're going to have a bounce for your wave 4. Everyone will get super bullish again, saying that was it. That's the bottom. And then you're going to continue on down for your wave 5, which this could be overextended, whatever, but we'll have to wait. This is where patience comes in. You wait for this to form, right? So once you get your wave 3, and something interesting I want to show you. Let's put that neckline on here, right? Put that neckline on there. Take this measured move again from the head, looking at this as a head and shoulders, and see where that lines up on the fibs. There's so much confluence here, right? That gets you right down to that range. Again, I don't know how else to put it, guys. I've been trying to warn you guys forever this. And then looking at this as a falling wedge, getting down to our 37 to 9,700. We've had these targets for 2 years. Could it happen? I do believe so. And BNB. BNB is dead in the water, guys. I've been talking about this since the FTX collapse back in November. We drew this chart out. Once we break this 202, guys, we've been getting support there. But remember, every time something smashes on the support, the weaker it gets. Once this support breaks, your next support is just your measured move. Looking at this as a bear flag, right? At 153. May get another bounce there. But once this breaks, I'm looking for 69. And if 69 breaks, guys, I think Binance is dead. Just saying. This chart is just amazes me. This is XRP. People are so bullish on it. Guys, the XRP army are the people that bought in this range and this range. This thing is a dying penny stock. I'm sorry to say that, but guys, you need to be careful if you're in this. If you wanted to get in this, if you really think it's going to go high, wait for it to at least open or close a weekly above this weekly trend line, which currently would be above 64 cents, right? That's a open or close. Well, if it closes, it's going to open. So a close above this white trend line before even thinking about buying this thing long term. And then if it breaks this yellow trend line, which these 2 wicks came to, then it could maybe be bullish. But guys, I think this thing had its day way back in 2018. My opinion, doesn't have to be yours. I know that upsets a lot of people. But guys, I don't like to see people lose money, and that's all people have done in XRP. All right, except the early people, right? If you're not early, stay the hell away from it. All right, so let's take a look at Ethereum. So Ethereum, this is what we've been waiting for this to break, right? We knew once we broke this, we were coming down to test this bottom trend line, which now is around 1842. Once that breaks, we can take our measured move from this rising wedge right here with the white bottom, yellow top, bring this over, and that gets us to around 600 bucks. But we do have targets prior to that. Once the 1482 breaks, these are my levels I want to look for. 926. If that breaks, 597. If that breaks, 280. If that breaks, 114. Not saying it's going to 114, which it very well could. I'm telling you to watch for your bounces at these levels. Litecoin. Litecoin, we broke our bottom trend line here, guys. We've had this for a long time. This was our first area we were watching, and I didn't put these targets here after it broke. These were here before it broke, guys. This is how these charts work. So we've had a couple fake bounces below this and then fake outs back above, right? But look at where the rejection is. This is the daily, and that's on the 55 EMA. Right now, our current resistance is 63. My target from when we broke this 78 has been the measured move. And if you don't think these measured moves work, go back and watch my videos, guys. They nail them. We put it down here to where it broke. That gets it to about 15 bucks. I do have a target from way, way, way back here, the break of this, right? Another measured move, measuring this rising, broadening wedge. Put it down. That got us to approximately 15. Oh, that got us to the same thing. So I don't remember. Oh, no, that got us to that 23 to 24, right? So between 15 and 24 is where I'm looking for Litecoin. Possible bottom if it does survive, right? And Tesla, you guys know my idea on Tesla. I'm not a buyer till 40 or 50 bucks because I do believe we'll head down there. Guys, good luck out there. If you're trading, make sure you use stops. Definitely check out my Prime XBT tutorial. I'll leave that right here. Also, just remember, guys, markets are extremely risky. Whatever you're doing, make sure to learn how to manage your risk so you don't lose it all. Ride the winners and cut the losers quickly. Love you guys. Make sure you smash that thumbs up. Subscribe if you haven't already. Leave your comments down below. Let me know what you think, and I will see you in the next video.